me share my screen with you guys first. Okay, I hope you can see my screen. See, in the previous class, we discussed about different topics. Three of them were basic and one of them were very important, which was market phases. Let me just revise. Let me take just few minutes and revise what is market phases. Okay. Now, what is market phase? See, in one market cycle, we have four different market phases: accumulation, yeah. So we have four different market phases in one market cycle. The first one is accumulation. The second one is markup. The third one is distribution. And the last one is a downtrend market phase. Okay. Now let me show you how it looks. Okay. So this is how it looks like. So first we have accumulation phase, which moves sideways. You can clearly see. Then we have markup phase, which makes a higher high, a higher low with a proper correction. Okay. And the third one is a distribution phase, which is basically means greed, right? Greed, FOMO, fear of missing out, all this you can say. And the last one is a downtrend market phase in which the market moves in downward direction by making lower highs and lower high, lower lows and lower high with a proper correction. Okay. So this is what we have learned in the previous class. In today's class, we will learn about different topics. And now, see, from now onwards, every topic is important. Each and every topic is going to be important for us. Okay. So now the fifth topic is candlesticks. Okay. Now you see, let me open my trading view for you guys. Okay. Let's go on Bitcoin. I think Bitcoin, everyone is familiar with Bitcoin. So we'll be using Bitcoin. Okay. And let's remove everything. Every indicator. Okay. Now it's more clear. Okay. Now you see, we have two different types of candlestick, first and foremost. Okay. The one is a red. The first one is a green candlestick, and the second one is a red candlestick. Correct. Now, green candlestick means bullish market. It means when the market moves in the upward direction. The second candlestick is basically a red candlestick, which means the market is moving in the downward direction. It's a bearish candlestick. That's what we call it. Green means bullish candlestick. Red means bearish candlestick. Okay. Two colors of candlestick, green and red. Green means the market is moving in the upward direction. Red means the market is moving in the downward direction. And if I go on the chart of Bitcoin, you see it's very clear here. Let's see this. See, when the market was moving in the upward direction, what we saw? Green candlestick, correct? Okay. And when the market is moving in the downward direction, what we will see? Red candlestick. See? Okay. Now understand this part. These are just colors, green and red. Okay. And green is basically saying that the market is moving in the upper direction. Red basically saying that the market is moving in the downward direction. When the market is bullish, you will see more and more green candlestick. For example, right now, as you can clearly see on the screen, right now what Bitcoin is doing, the Bitcoin is moving in the upper direction, correct? And you see, let me just remove every drawing that we have. See, the market is moving in the upper direction, so that's why we are seeing the green candlestick. Okay. If the market was moving in the, or if the market here, if you see the market is moving in the downward direction, then we will see a red candlestick. Okay. Is that clear? Okay. I hope that much is clear. Now, one more thing here. Right now, if I click on this small arrow, a downward arrow, you see now we have time intervals. This word is important. Time interval from 1 minute, we have option from 1 minute to 12 months. From 1 minute to 12 months, right? And right now we are on a 1 day chart. This is what we call a chart. If I choose a 1 day, that means I'm on a 1 day chart, right? What it means? It means that each and every candlestick is giving me a data of 1 day. This is a today's candlestick. Okay, this was yesterday and this was day before that. So this is a 1 day data set. It is providing us information about 1 day. The data set or the time interval is 1 day. Okay, so this is 1 day, and there's the day before that, the day before that, and so on. You can see. Now the combination of these candlesticks creates a chart. What I'm trying to say, understand this part. Each green and red candlestick, it represents or it provides us a data. Okay, if I am on a 1 day chart, which I have selected from here, you see, if I click on this small arrow, it will show me all different time intervals, and out of this I have chosen 1 day. Okay, and in the previous class I discussed about that what we are going to learn. We are going to learn swing trading. Okay, so if you are doing a swing trading or as a swing trader, you must be using charts within the interval of 1 hour to 1 day. That's from 1 hour to 1 day, we will be using these charts. Okay, and you can clearly see my favorites. 1 hour is my favorite, 4 hour is my favorite, and 1 day is my favorite. You can see I have a start market already. Okay, right now we are on a 1 day chart. That means each and every candlestick is providing me a data of 1 day. If I go on a 1 hour chart, let's say, now what we can see, now we can clearly see that each candlestick is providing me a data of 1 hour. Okay, each. So this is the previous hour, the hour before that, and the before that, and before that, and so on. Okay, I can also go on a 1 minute chart. If I go on a 1 minute chart, you can clearly see this candlestick is in formation right now. See, the market moved up, so this candlestick turned into a green one. Okay, and we still have 49 seconds left to complete this candlestick. And once after 44 seconds or 43 seconds, there will be a new candlestick. Okay, okay, as you can clearly see on the screen, the market is moving up, so it becomes a green candlestick. If the market goes down, then it will convert into a red one. Okay, I hope this much is clear. Okay, so now we have understood that there is a candlestick, two types of candlestick, green, red. Green means bullish, red means bearish. We have different time intervals, and as a swing trader, generally we will be using 1 hour, 4 hour, and 1 day chart. Okay. Now, as I said, this candlestick provides us data. Okay. What kind of data, and how to read those data? Okay. So let's go on a blackboard. Let's solve this. Okay. Now let's say, what is the significance of the different sizes of candlestick? Of course, we will take that. I will take questions in the last 10 minutes. I will take all the questions. Nothing to be worried about. So let's say, let's take an example of 1 day first. So we are on a 1 day time interval. Let's say the name of the coin is anything. Let's say ABC. Okay, that is there. Okay. Now hypothetically, let's say around 00.00 a.m. Okay, the market starts around 5 USD. Okay, and it basically calls open. The market opens around 5 USD. Correct. Then what happened? The market moved down. Great. So let's say the market moved down, and it creates a low around, let's say, 6 a.m. at 3 USD. Let me just refresh this thing. Okay, around 3 USD. Okay, and then the market moved up and creates a high at 6 p.m. and this is around 12 USD. Okay, and then it closes the day at 10 USD around, let's say, 11:59 p.m. Okay, 11:59 p.m. Okay, so you can clearly see the market opens around 5 USD, then it goes down, it creates a low around 3 USD, then it creates a high around 12 USD, and then creates a close. It closes the market around 11, or let's say 12 at the end of the day. Now what we have to do here is we have to put all this information on a candlestick. Now let's draw a candlestick. Okay, so this is our candlestick. Now this is what we call a Japanese candlestick. Okay, Japanese people or Japanese trader, they created this candlestick to read the market in a proper way. Okay, so now let me show you how to put all this information on this particular candlestick. It's going to be very simple. Just hear me loud. Okay, so see, generally, one more thing before I go to that part. In this candlestick, we have two parts. The first one is a body. So this rectangle you are seeing is it's what we call a body of the candlestick. And this is an upper wick, and this one is a lower wick. Okay? So it has two parts, just like a human body basically. So this is the body, and this is basically your left hand or right hand, whatever you can say. So here we call it a upper wick and a lower wick because this is two-dimensional. Okay? And this is our body. Now let's put all this information on the candlestick. So what we have here is a low, which is around 6 a.m. and the low is around 3 USD. Okay. So see, generally the low of the day, or it can be any time interval. It can be 1 hour, 1 minute, 4 hours, okay, 15-minute chart, it can be whatever. Okay, so you can put any time interval in this case and it's still all the things will be valid. So this one generally goes at the bottom of the bottom, right here. Okay. So that's a low at 3 USD. Correct? Now, generally the high of the day or any time interval, that is important, goes at the top of the top wick. That becomes high around 12 USD. Okay. Now, remember this part. Whatever data is close to the low. So in this case, we have open. Open is close to the low. Correct? So whatever data is close to the low generally goes at the bottom of the body, right here. Open around 5 USD. Okay. And whatever data is close to the high, this is important. In this case, we have close that goes at the top of the body. Correct? So that's a close and 10 USD. We don't need to write the time of the market cycle, market phase. In this case, we just have to put the data itself on the candlestick. Okay. So what we have here at the top of the top wick, we have the high. At the top of the body, we have the close. At the bottom of the body, we have the open. And at the lowest point of the lower wick, we have a low. Okay. Now, in this case, what happened? You can clearly see. The market did open at 5 USD. And it did went down and created a low around 3 USD. And then it went up, created a high around 12 USD. And then it closes the market at 10 USD. Now, here we have to just focus on the open and close. If close is higher than open, then what it means? It means the market has moved up. The market has moved up. Okay? That's why the close is higher than the open. And in that case, we are going to see green color of candlestick. Okay. Why? Because the overall market moved up. Of course, the market made a low of 3, but where it closes the day, that is important. So in this case, it closes the day around 10 USD and it opens around 5. So that means the market is moving in the upper direction. And because of that, we are seeing the green color candlestick. This is important part. Now let's take a different example. Let's say, again, a one-day chart. Okay. And the name of the coin is again, let's say ABC. Now, in this case, what happened? Let's say the market opens at 10 USD. Okay, then it moved up, creates a high, then goes down, creates a low, and then it closes somewhere. So the high is around 12 USD. The low is around, let's say, 3 USD, and it closes the day around 5 USD. Okay. Now, what if I want to put the same data again on the same candlestick? Okay, so here we have it. So now in this case, what will happen? That most of the things will be simple. Again, a similar thing. Generally, as I said, where the low will go at the lower part of the wick, the low of the wick. So that's a low, 3 USD. Where the high will go, it will go at the top of the wick, top of the top wick. High, 12 USD. Okay. Now, as I said, whatever data is close to the low, it goes at the bottom of the body. So in this case, actually, I wrote it in the incorrect way. This is going to be the close. Yeah. So the market closes around 5 USD. Okay. So in this case, what we have here, close to the low is a close, right? So in this case, it usually with a close around 5 USD, and the market opens, as I said in the previous class, in this previous section, in this right here. Okay. Whatever data is close to the high generally goes at the top of the body. Okay. So we have open here, and this is 10 USD. Okay. Now what happened in this case? In this case, the close is less than the open. That means overall the market moved in the downward direction. Okay. So in this case, of course, we are going to see a red color of candlestick. Right. So we have two types of candlestick, green and red. In green, the close will be at the above part, above the top of the body, and the open will be at the bottom of the body. In this case, the open will be at the top of the body and the close will be at the bottom of the body. Okay, if I go right here, you can clearly see. In this case, what happened? The market opens at the top, right here the market opens, and then it went down. Okay. In this case, in the green one case, what happened? The market opens at the bottom right here, and then it goes up. Okay. So that's why there is a color. Now, if you see right now what Bitcoin is trying to do, Bitcoin has made a little bit. I'm experiencing sound issues. Anyone experiencing sound issues? Please let me know if I am audible or not properly. Admin, can you please check? Okay, let me just continue. Yeah. So we have two types of candlestick, green, red, as I showed you. Okay, now let's move ahead. Now see, there are different types of candlesticks. We have so many different type of candlesticks, more than I think 30 or 40 different type of candlesticks. Okay, and the candlestick, they also have patterns. So what I'm going to do, in the Telegram group, I will share a PDF with you guys. And in that PDF, we have different types of candlestick, and it has explained in a detailed way. Okay, what are those, how to use them and everything. Because this itself topic is a very big topic. It will take like 2 or 3 hours just to understand each and everything. So what I'm going to do, I will share my PDF with you, a detailed PDF which I have on candlestick. So you can read it. And if you have any question, then of course you can share those questions in the next class with me, and I will take that. Okay. But again, and of course, you can go on YouTube, you can type just different types of candlestick, and it will show you a video of, let's say, 1.5 hour or 2 hour of length. Okay. But you can see, if you want, you can also take the screenshot of this page of my screen right now. So you can Google it after this class, And also I will be sharing the PDF so you can read about it. But yeah, this is important first and foremost. This is not that much important, but if you know, then it will always be, you are going to use it in some way or other, right? But it's not that important, right? Okay. Now let's go to the next part, which we have is just support and resistance zone. Okay. Before I talk about support and resistance, they are 30%, 30% part of trading. It is that important. If you just know about support and resistance, that means now you understand where the market is moving and what you can expect from the market. Okay. So support and resistance is very, very important. Now let's talk about it. Let's go on Bitcoin chart. I'm again, as you can clearly see what I've done, I've chosen a 1-day time interval chart. Okay. Let's draw a proper support right around here. Okay. See, on the left hand side, we have different tools on TradingView, and I'm going to use a fifth tool, 1, 2, 3, 4, 5, sixth tool, which is geometric shapes. And here we have rectangles, this option. So I'm going to choose it, and I'm going to create a rectangle right around here. And this is a range. Okay, so first and foremost, support and resistance, you will always see them in a range. There won't be a single line. They won't be like this. Okay, there will always be a range. So always use a rectangle to draw support and resistance. Now, this is a support. This area is a support. Now, why it is a support? Because from here, you can clearly see the market moved up. Again, see the market goes down, and then from this area, the market moved up. Again, from this area, the market moved up. Again and again. So what happened here is that there are good numbers of buyers who are supporting the price of Bitcoin, particularly in this region. Okay. And when there are good number of buyers who are supporting the price and the price is getting pushed back up again and again, or just even one time, let's say, you can call that zone as a support zone. Okay. Let me show you more example of this. So now this is also a support zone. See, support zone right here, we have a support zone, and I can call this as a support zone. I can call this as a support zone, right? In the future, of course, if you see, and let me just do one thing. Let me extend this particular support zone in the future. You see, the same zone that was acting as a support in around the month of January 2021, the same support zone acted as a support in the month of June and July 2021 again. Okay. So you can clearly see we have so many support zones in the chart. Again, we have a support zone right here, and I can draw a support zone right around here. You see, we have so many support zones in a chart. Okay, and if I want to draw a support zone right here, let's say I can draw something around here. I can also draw something around here. Okay. I can draw something around here, right? Now, why this is a support zone? Because the price are getting pushed up. When the price goes to this particular zone, the price again got pushed up, right? Again and again. The same concept. Again and again, right? And that's why it's a support zone. At support zone, you will find there are huge numbers of buyers, or maximum the buyers are creating the support zones. Okay? Maximum time. Okay, that is one thing. Now let's talk about the resistance. Okay, let me remove everything from the screen. Okay, so now we have understood that this is a support zone. Why it's a support zone? Because the market is moving in the upward direction after touching that particular zone. That is the one thing. Okay. Now, what is a resistance zone? From a resistance zone, the market generally gets rejected. You see, after touching this particular zone, the market got rejected. Correct? The market moved down. And then again from the support zone, the market moved up. And then again from the resistance zone, the market moved down. And again from the support zone, the market moved up, right? You see, it happens every time. This is my resistance zone. What happened from here? The market moved down. Then I found out a support zone. What happened from the support zone? The market moved up. Correct? So you can draw many support and resistance zone on each and every chart. That's a resistance zone, right? See what happened there? The market moved down. Okay, because it's like taking a U-turn from the top. Taking a U-turn. That's a resistance. If the market takes a U-turn from the bottom, what happens? That's a support zone. At support zone, the market or the buyer supports the price. At the resistance zone, the seller resists the price. Okay. Now what at the resistance zone, what the sellers are trying to do? They are trying to sell as many tokens and they want the market to move down. Okay. At the support zone, buyers want to move the price in the upward direction. I hope that much is clear. Let me draw a few more things in the current market. Let's say. Okay. So here, if I see a support, that much is clear, I believe. What happened at the support? The market moved up. Again and again, you can draw more and more support. Correct? Okay, great. Now, where is the resistance zone? You see, I can draw this as a resistance. Correct? Why? Because from here, the market moved down. That's why. This is most important part in trading. It's very basic. Everyone uses it, but it's the most important part. Okay? Again, this is a resistance zone. Why? Because the market moved down from there. Okay? Correct? One more thing. Generally, see, support zone is the area where buyers support the price. Always ready to buy. Okay. Resistance zone is the area where sellers resist the price and they want to sell. They want the market to move down in the resistance zone. Okay. And one more thing, support and resistance zone are present everywhere. Doesn't matter if you are playing on a 1-day chart, doesn't matter if you are playing on a 4-hour chart, doesn't matter if you are playing on a 1-hour chart, and it doesn't matter if you are playing on a 15 or even 50, let's say 15-minute chart. Okay? On a 15-minute chart also, I can try to draw some kind of support and resistance. You see, now this is a resistance for Bitcoin right now. This is a support for Bitcoin right now. Okay? Something like this. So even on a 15-minute chart, we have support and resistance. Let's say even on a 1-minute chart, we will have the same stuff. You see right here, I'm using a 1-minute chart. And even on a 1-minute chart, I can try to draw some kind of support level. See, from this area, the market moved up again and again. Okay? And let's say from here, the market moved down. So this becomes resistance, this becomes supports. Okay? In each and every time interval, you will find support and resistance. It's just that this is what we draw on a lower time frame. See, let me use a 4-hour chart. Okay? So this is what we draw on a 15-minute chart, and these two things what we draw on a 1-minute chart. Okay, but if I zoom out and I use let's say on a 1-day chart, if I use a 1-day chart, you will see this support and resistance, they don't make sense. Okay, why? Because we have drawn this support and resistance on a lower time frame. But so this support, first one foremost, this bigger support and resistance, they are useful for swing trading, and this is smaller support and resistance, they are useful for day trading. Because on day trading, in day trading, we use smaller time frames. In swing trading, we use higher time frames. Okay. You can drop your questions in the chat. I will take it after 10 minutes. Okay. So that is this. Support means the buyers are coming in and the market is moving up. Resistance zone means the sellers are coming in and the market is moving in a downward direction. Okay. Now again, the third thing. Generally, you will find this support and resistance at a psychological values. Now, what I mean by psychological value? Let me show you by example. You see this particular support level, that is support level, right? Correct. This support level is around what price? It's around 20,000. You see 20,000. 20,000 is a psychological value, psychological number. Every trader we'll see this kind of psychological values. Okay. Then what happened? You see, then we saw a new support level, and this is around $25,000. So $20,000 then becomes $25,000, right? And where is the next resistance? We saw the next resistance is around $30,000, right? Why? Because it's a psychological number, psychological value, and most right now. Let's see right now what happened. You see, we saw a resistance in Bitcoin close to $45,000. Why? Because it's a psychological number. Generally, you will find this support and resistance at a psychological numbers. For example, let's say if a coin is moving within a range of $1 to $10, okay, then you will find support and resistance mostly around $1, $2, $3, $4, $5, maybe 6, 7, 8, 9, and 10. Okay. If a coin is moving from $10 to $100, then you will find support and resistance around 10, 15, 20, 25, 30, 50, 55, 60. All these numbers are psychological numbers, and you will most of the time, almost 90% of the time, you will find support and resistance on those particular psychological level. I can show you an example. Now see this point. This is a matic, correct? Okay. Now matic is moving from $0.1 to $1 right now, and this is the range. Okay. Now you see where we found the support. Found the support around 0.5, right? And where we found the resistance close to $1. Say close to $1, almost close to $1. Why? Because those numbers are psychological numbers. As a trader, as an investor, you will always look at those numbers. Okay. So if a coin is going from 0.1 to $1, you will find at 0.1, 0.2, 0.3, 0.4, so on up to $1. That will be some psychological numbers. Okay. For example, dot. Now dot is moving like what? From 3.5 to basically from $1 to $10 right now. So you see at $10 right around here, you see this part. We saw resistance. Why? Because of the psychological number. Okay. So make sure you understand this particular. You will find support and resistance mostly at the psychological numbers. Okay. Support means where there are more number of buyers and the market is moving up from the support level. Okay. Resistance means the market is moving downward in a downward direction, moving in a downward direction because we have lots and lots of sellers. That's it. Okay. Now let's move to the next part, which is theorems of support and resistance. The first theorem is very simple. Every time the price action hit any zone, that zone becomes weaker. Price action means price, how the price moves. That's what we call a price action. Okay. Every time the price action hit any zone, that zone becomes weaker. Okay. Now you can see this is support zone. Okay. Now the price goes down, hit it once, then goes back up, then comes down, hit it twice, then goes back up, then comes back down, hit it thrice. That means what is happening with every hit, this support is becoming weaker and weaker. Okay. And at one point, for example, let's say, let me give you an analogy of it. Let's say you have a hammer in your hand and you are trying to break a wall. What will happen? You will hit it once, the wall will become weaker. Then you will hit it twice, then again the wall will become weaker. Then maybe it will hit it 3 times, 4 times, or maybe 5 times. But what will happen eventually? The wall will break. You will create a hole in the wall, right? So support and resistance is just like a wall. And with every hit of the price, that wall will become weaker. And maybe after 3 attempts or 5 attempts or 7 attempts, or maybe even after 10 attempts, the support or resistance zone will break eventually. Okay. This is the first example. You can clearly see how a support is broken after 3 hits. And this is the resistance zone which got broken after 3 hits. It's not like it has to hit by 3. Okay. It can get a hit like 4 times or 5 times or sometimes even 7 times. Let me show you an example of all that. Yeah, this one is a good example. Okay. Now you see this is my support level. So very, very big, very strong support level right here. This support level played from February to the month of November. Okay. And how many times it got hit? 1, 2, 3, let's say 4, 5, 6, and in the seventh hit, the market went down. Okay, but you see with the every hit, this support level is getting weaker and weaker and weaker and weaker and weaker. Okay, so with every hit, the support is getting weaker and weaker, and after maybe 3 attempts or 4 attempts or 5 attempts or 7 attempts, it will break eventually. I can show you the same example for resistance here, right here. This is my resistance level. See why it's a resistance? As I said, because the market is dropping after touching that particular zone. Okay, the sellers are trying to push the market down from this particular zone. That's why we call it as a resistance zone. So 1, 2, 3, and you see the market is hitting 1 time, 2 time, 3 time, and in let's say 4th time also. Okay, and in the 5th attempt, the market is able to break this resistance level, and then the market moved up. It's very clear from this area. Okay, so here it's making weaker. The resistance is getting weaker with every hit. Okay, so 1 hit, 2, 3, and then 4, let's say, and then on the 5th hit, this particular resistance zone is broken now and the market moved up. Okay, and you see the same example almost on every coin, almost everywhere. You see this support zone. In the 4th attempt, it got broken, the market went down. See this resistance zone, 1, 2, 3, 4, and in the 5th attempt, the market moved up from this particular resistance zone. Same logic I can give you right here. This is also the same logic. A resistance zone, 1, 2, and the 3rd attempt, the market moved up. If I talk about in the latest market, okay, this one is a good enough example. See this one. First attempt to break the support level, second attempt. In the 3rd attempt, the market is able to break the support level and then the market went down. Now let me show you this. Now see, this is my resistance level, correct? So market hit it once, then twice, then thrice, then the market went down for a few months. Then there's a 4th attempt, the 5th attempt. In the 6th attempt, the market is able to break this resistance zone and then it moved up. Okay, so I think this much is clear. Let me revise once again. What is support? From where? From a zone. Let's say this is a zone, and if from the zone the market is moving in the upward direction, then we call it as a support zone. You see this part, the market is moving down, touches this particular zone, and then it moved up. So this becomes a support zone. The opposite of support zone is a resistance zone. From a zone, see, this becomes a zone. The market was moving up, touches the zone, and then it drops from that zone. Now that is what we call a resistance zone. Okay, and the first theorem is very simple. Every time the price action hit any zone, that zone becomes weaker. In this case, we can see the examples. Here it's hitting once, twice, and thrice, and then the market is able, or the price is able to break the support zone. Here it's a resistance zone, and after 3rd attempt, the market is able to break the resistance zone. Now this can be 2 attempts also. Sometimes it can take 3 attempts, sometimes it can take 4, sometimes even 7, who knows, right? Okay, but eventually the support zone and the resistance zone, it will break. Now the second theorem. The second theorem is also simple. It's a support becomes resistance, and how a resistance becomes support. Okay, so for example, if let's say this is my support, or let's say this is a zone. Okay, just write it as a zone. Okay, now it can also act as a support, it can also act as a resistance. Okay, now let's say the market is moving in the upward direction. So from here the market moves up, and then now this particular zone act as a resistance, so the market drops. Okay, So here it was acting as a resistance. Let me write it in the red color. So it acts as a resistance zone. Then again the market moved up. Okay. Then again it goes back down. Then again let's write it as a resistance zone, correct? Then let's say in the third attempt also, the market moves up. In the third attempt, let's say the market is able to break this particular resistance zone. This is a zone now till this point. Till this point, it was acting as a resistance. Okay. And let's say after this point, the market is able to break this resistance zone and it moved up. Great. Okay. Now from here, let's say the market drops. So now what will happen? The same resistance zone might act as a support. Okay. So from this particular zone, the market might move up. Okay. So now what happened here is the same resistance zone that was acting as a same zone that was acting as a resistance is now acting as a support. Okay. Okay. So this is how a resistance converts into a support. Okay. A resistance zone converts into a support. Most of the time, this will happen when the market is moving in the upper direction. Most of the time, let me explain once again. A resistance zone will convert into a support zone if the market is moving in the upward direction. Okay, let me show you example of this. Now see, a resistance zone, correct? This is a resistance zone. This is a resistance zone, correct? Okay. Now you see, if I extend this here, okay. Till here everything was good. This was a resistance zone. Everything is good. Then the market broke this resistance level and the market moved up. Correct? Now what happened next? You see, if I extend the same zone in the future, you will find out now the same zone is acting as a support. Let me remove this one. Okay. Now the same resistance zone is acting as a support zone in the future. And this is how a resistance zone converts into a support zone. Okay. Here it got converted into a support zone. Okay. So when the market is moving in the upper direction, what we can say, a resistance zone can convert into a support zone. Okay, something like this. See, the same zone that was acting as a resistance is now acting as a support. Okay, so what when happens when the market is moving in the upper direction? Great. Now let me show you again a different example. When the market is moving in the downward direction. This can be a good example also. So here, the next example is when the market is moving in the downward direction. So here we have a zone. Great. This is just a zone. Okay. The market is moving in the downward direction. So what will happen? This zone will act as a support, let's say. Then after two attempts, the market is able to break these support zones. And then it moved down. Okay. And from here, the market again moved up. So now what will happen? This support zone will act as a resistance. Okay. This is important because in the next class, when we talk about the trading setups, we will create our own trading setups based on this particular information. Okay. So here our support zone converts into a resistance. Okay. And this generally happens. The support converts into a resistance when the market is moving in the downward direction. Okay. I can show you the example, of course. Right here we have an example. See, I can use a rectangle, draw something, you see. Same zone that was acting as a support, once broken, now acting as a resistance. Okay, it's very simple. but it's the basic of trading. You have to understand this part. The same zone that was acting as support now acting as a resistance. See, here it will be hard to find because the market is moving up, but when the market moves down, the support acts as a resistance. Okay, and of course it's true on any time interval and any time interval. Doesn't matter if it's a 1 day, 4 hour, or 1 hour. It can be used on any time interval. Okay. Any questions, guys? What is the significance of the different sizes of characteristics? That's a very good question, of course. Okay. So, for example, the first significance is, of course, by volume, how many sellers and how many buyers. Okay. For example, in this case, you see, this green candlestick has a length on an average. This is the length. Okay, it moved like what? From 49,000 to 51,500, let's say. Okay, that means within this day, the market moved overall what? $1,500 in the upward direction. Okay, so of course the market does have a bias, right? Okay, but the buyers are not that much great, not that much aggressive, let's say. But after 2 days, what happened? The market moved down, and this downward movement is crazy, of course. You see, it started from 52,614, and it went down till what? 42,000, or let's say 43,000. Okay, that's an 18% downward movement. That means here there are a huge number of sellers, and they wanted to sell their Bitcoin, I mean, as soon as possible. Okay, so this candlestick, or the length of candlestick, is showing us the strength of buyers and sellers. If it's a solid green candlestick, a bigger one, let's say something like this one, see, huge numbers of buyers. They wanted to move the price in the upper direction. Okay? More buyers who want to purchase Bitcoin at a higher and higher price. Okay, here we have more sellers who want to sell their Bitcoin at a lower price. Okay? So that is what I mean by the significance of different sizes of candlestick. Okay? Any question, guys? Please drop your questions in the chat, and I will take it from there. Few people are also trying to enter, I believe, but they are almost. I mean, we are almost at the end of the class, so they are late. Now let me show you the update about the crypto market and what I think what can happen in the future. Okay, so you see, we have a strong resistance right here. See, around 40, let's say above $45,000, we have a strong resistance. That means what I believe is that we might experience a downward movement, at least for a short amount of time. I know that after 3 or 4 months, we are going to enter into the bull market, but at least for the short amount of time, for at least, let's say, for the next 3 or 4 months, we might see a correction in the chart. Okay? So we might see something like this happen in the near future, or maybe the market can also move down from right around here. Okay, that can also happen. Okay? There is a very high probability that the market might move down. Maybe we will go few percentage more in the upper direction. If not, then of course from here also it's a good area to go downward movement. Okay? Why? Because the market has already moved up within a very short period of time. You see right here, within what? Within, let me show you. Within 84 days, the market moved up by what? 76%. And we are talking about Bitcoin, not even as altcoin in this case. Okay, and right now I don't think the bull market has started. We are still in the accumulation phase, and we will see a downward movement from Bitcoin. It must make a correction. Okay, and how, I mean, we see what are the levels which we can see the correction up to. So for example, 35,000 is a good level for correction. Why? Because of the psychological number. As I said, the market can go down up to for $35,000, and it can create, or it can act as a support. Why? Because of the psychological levels. As I said in this class, if it goes down from here, then what will happen? the previous resistance level might act as a support, which is around almost around $30,000. Okay, we just learned about it, right? How a resistance becomes a support. Okay, so with this theory, with this knowledge, now you know that the market or where the market can move down. If the market goes down, then the 35,000 is going to be the support level. Great. If it goes down below that, then of course 30,000 is going to be a support level. Okay. And about the resistance level, I believe 45,000, somewhere close to 45,000. Now it can be 44, it can be 46, but it will be close to 45,000. And this is the range. Okay. And from this range, I believe the market must move down. Okay. Almost almost every coin they have slowed down, I believe. Almost every coin, even DOT has slowed down or did moved up. Now it's slowing down. You see, we can clearly see the movement. Okay. And if BTC goes down, of course, every other coin will move in the downward direction. Any question? If you have any question, please let me know. If not, then of course we can conclude this class. Okay. And let's meet in the next class. I will share the PDF, as I said, the candlestick PDF with you in the group. So do read it. Okay. It's not that much important, but if you know about it, then it's always helpful to learn a little bit more. Okay. In the next class, what we will do is we will talk about different topics again. Till now, we have completed up to 8 points. This is what we have completed. In today's class, we have understood what exactly is the psychological level. Yeah. Okay, let me explain again once again. So see, generally, as a trader, you have to keep some numbers in your mind. Okay. So for example, let's say right now, what is happening with Bitcoin? The Bitcoin is moving from 15,000. It has moved from 15,000 to 44,000. Correct? That means if you check this 20,000 is a psychological number. You see, 15,000 is also a psychological number. Then we have this number, which is 25,000 is also a psychological number. Psychological numbers are those numbers where traders put their buy or sell orders. Most of the traders, they put their buy or sell orders at the psychological numbers. Okay, they are psychological because you can easily get attention from those numbers. Let's say, for example, if BTC breaks $30,000 mark, then of course there will be news. People will start talking about it. That okay, BTC has broken 30,000 mark, right? So that becomes psychological number. Just like that, for example, if BTC breaks $45,000 mark, then that 45,000 is going to become the psychological number, because now that number has attention of most of the traders, and most of the traders, they will they will put their buy orders or sell orders at that number. Okay, so all these differences, let's say 15,000, 20,000, 25,000, 30,000, 35,000, 40,000, 45,000, those are psychological numbers in the case of Bitcoin. Okay, now in the case of Solana, let's say, now Solana is moving between what? Between 10 to, let's say, 100. Okay? So 10, 20, 25, 30, 35, 40, 45. This will become a psychological numbers because traders will have their buy or sell orders around those numbers. Okay. You see this one, this particular resistance level. It's around $30. Why it's around $30? Why not 35 or 30, sorry, 34, 33? Why it's around $30? Because that's a psychological number. Okay. Most of the people will look at it. Now this, see, let me just zoom in for you. This, right? Why we are getting rejected from this particular point? What's special about it? The special is, of course, because it's close to $25. That's it. Most of the sellers, they are going to put their sell orders around those psychological levels, as I said. And this 25 is, of course, a psychological number. Okay, it's important for traders. Okay, I hope this is clear now. Any other question? Okay, if not, then I think we have one more question. How do you know for how long the data is? I think you are going to, you mean how do we know how long the data is, how long the data is? Can you please elaborate this question? How do you know for how long the data is? There are two data basically. The one is in the candlestick and the other one is this one, which we use generally. Questions from the user Sasa. Okay. Okay, let me explain both ways. So if you are swing trading, then we have to use at least 6 months of data. Okay, horizontally. So this one. So you see February. So is it for a day or a month or a year? So if we talk about this one, the candlestick part. So right now I have chosen a 4-hour chart, right? So that means each candlestick is providing me a data of 4 hours, just for 4 hours. Okay. And you see, this is a new candlestick now, and this is in the formation. So it will take around 3 hours 55 minutes to complete this particular candlestick. So if I talk about the candlestick data, then you have to choose the data set, right? For example, I can click on 1 hour, and now I will see 1 hour candlestick. That means this is a 1 hour data. This is the previous hour data, and this is the data before that. Okay. Now, if I talk about the horizontal data that we have to choose, then as a swing trader, you have to choose at least 6 months of data horizontally. So, for example, let's say, let me click on 6 months. So we have a month of July, August, September, October, November, and half of December, right? So this becomes 6 months. So if we are going to swing trade, then we have to use at least 6 months of data horizontally. Okay. Vertically, if you talk about, then we can always choose. And generally, we choose from 1 hour, 4 hour, and 1 day. These three are my favorites. And of course, you can choose those numbers or those time interval. Okay. If you want to see the, or if you want to analyze the chart. Any other question? I hope this is clear now. Hmm. I will wait. Let's say wait. Let's wait 30 seconds more. And if you have any question, please drop it in the chat. If not, then of course, tomorrow I will share the PDF with you. The I don't have it right now on my screen. Oh, I think I have. Yes, it is clear. Okay. So this is what I'm going to share with you, the candlestick trading Bible. Okay. And you can read it. It has different types of patterns. You see candlestick patterns. It has so many patterns. Okay. So read about. I mean, of course, it's very lengthy. It has 168 pages. So please do give time, at least half an hour or 15 minutes per day, and read it. It's going to be very informative for you guys. Okay. Generally, I sell this particular PDF, but because I'm getting paid from the company itself, so this PDF is free for you. Generally, I charge like around 50 or 60 or $70 for this PDF. Okay. But I will share it with you guys tomorrow in the Telegram group. Okay. So please do read it. And yeah, if you have any question, of course, the time is over for this session, but you can drop it in the Telegram group. And if not, then of course, from the next class, in the next class, you can drop that questions in the chat. Okay. Will the PDF will be shared by tomorrow? Yeah, of course, I will share it tomorrow. No worries. I will share it tomorrow. Okay. So yeah, everyone have a nice day. I hope you found this class informative and useful. So thank you.